Thank you very much. We've come to expect things on the internet to be free. When you're not paying for it, it's not free. You're the product, someone else is the customer. When you go onto Facebook and it's free, you're the product being sold to the advertiser, and your information is sold to God knows whom. So we now have a system where we're telling investors that it's free to invest to buy and sell stock. There are two ways to pay the folks involved in Wall Street for buying and selling stock. One is a commission, and you know what it is. And so we discourage investors a little bit from buying and selling stock because they have to pay a commission, and they know they're paying a commission. The other way to do it is to give them a worse execution. Whenever there's a stock being purchased and sold, the market maker, perhaps Citadel, might be willing to sell the stock for $10.05, but will buy it for only $10. The difference is 5 cents. And so the issue is whether Robinhood and other people who are being told you get it for free are really getting it for free. Mr. Griffin, you're a market maker. You pay some brokers for order flow. You don't pay others for order flow. So when you pay for order flow, you're not making as much on the transaction. You have to pay some of that back to the broker. That's hidden the amount of that is hidden from the customer. The fact that it exists has perhaps recently been disclosed. SEC rules require that people get the best execution, but I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood, and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer? Mr. Griffin.
So, Congressman, I believe that's an excellent question. The execution quality that we can provide as measured in terms of price improvement is heavily related or correlated to the size of the order that we receive. So if I were to speculate,
don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question. Assuming same size of order, one comes in from Robinhood, one comes in from Fidelity. Is it not true that one is going to get a enhanced best execution, and the other one is just going to get best execution?
So as I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomenon in economics that channels matter. So, for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, reclaiming my time, sir. Who gets the better deal? The one that comes from a broker who is being paid for order flow, and one not. Can you testify that on balance, there is no difference, assuming the same size of the order?
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, you get when your broker is being paid for order flow, you get a worse execution. Otherwise, you're in a peculiar circumstance where you're making more money on a Fidelity transaction than a Robinhood transaction, which would be an absurd business practice.
The gentleman's time has expired. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chairman, for holding this hearing, and thank you to the witnesses for agreeing to testify. It's been reported that approximately 20% of market volume is now attributable to retail customers, which I think is just fascinating considering that's up from 10% in 2019. And that's an overwhelmingly positive development, allowing for more market liquidity, more stability, additional avenues for households to grow their wealth. And it's important to increase market access for retail customers. And I don't want to disrupt that if we possibly can. So I'd like to turn with my first question to Mr. Teniff. Let's talk about the attention that this pay for order flow has received. You explained in your testimony, Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor, and just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Now, could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective? Could you expand on that? As you outlined in...
Absolutely, Congressman. So as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of price improvement. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run. We make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution quality than exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
No, are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
Mr. Kind of in the Dodd-Frank process that the chairman and I went through a decade ago, plus there was much discussion about margin requirements. Give us just a discussion for an instant about when you discovered you had a $3 billion additional margin call.
So, thank you, Congressman. I believe the full play-by-play of that situation was described in detail in my written testimony. Just to clarify, though, this decision had nothing to do with margin.
Expired, unfortunately. Thank you, Madam Chair. I yield back.
Has expired.
Hey guys, did you know we have a podcast called WJ Live?
The Western Journal's mission is to equip readers with the truth, and that's the same mission we have on WJ Live.
You'll hear from writers, editors, and special guests on the most important topics of the day.
You can watch us every day at 5 p.m. Eastern, 2 p.m. Pacific on youtube.com/WJ Live.
While you're there, help us out by subscribing and hitting the bell so you don't miss any future episodes. See you there.